Have we stepped on to the military conflict escalator? We're going to talk about that with our good friend and colleague, Professor Mark Guttner of Rutgers, today on Office Hours. Hello, everybody, and welcome. I'm Mike Coe. Welcome to Office Hours with Professor Mark Guttner of Rutgers. Mark, how are you, my friend?
Excuse me, I'm doing quite well. The students are prepping up. It's time for the second round of midterms. I do 2 midterms and a final quiz. So I had 2 heavy lifts in the middle of the semester and kind of leave a little bit light. So that gives them more time for all the other professors that like to give 3-hour finals. So I kind of balance it out.
No oral examinations for you. Remember the movie Old School? Was it not Old School? It was Back to School with Rodney Dangerfield, and in the end of it, he has to go and take an oral examination because he has other people. He's a business executive, and he decides to go to college with his son, and he delegates as a CEO would. And I remember he has Kurt Vonnegut write his paper on Kurt Vonnegut. In any case, no oral examination. So, Joseph came and he actually just sent us a message here. Thanks for joining us once again. By the way, if there's anybody who is watching this on X, because I think we're publishing this to X Live, I'm not 100% sure, but hopefully that's working. But if you are watching and you see people posting questions or comments, you can do that live, but we only have a mechanism to interact with the live chat on YouTube. So if you go to the YouTube channel and put your questions or posts in there. This is not the first one we received, but it's the first one we're going to address. Joseph came and says, "Hi, Mike. Happy Taco Tuesday. I hope." Trump always chickens out is what that acronym stands for. Now, we were discussing this a little bit before we went live just now because, of course, we're all waiting with bated breath, I guess, for what is going to happen. Is the Strait of Hormuz going to be reopened or not? And if Iran does not respond, will Washington respond?
Yeah.
The way they have said that they would. Now, there is a very big difference between, tariffs, which is, I think, the thing that people were looking at before and deciding, okay, well, I'm going to move the tariffs up, I'm going to move the tariffs down. That versus issuing a military ultimatum that says, if you do not do this, from a military perspective, then I will do that. Because in this particular instance, if you make those types of threats and then fail to follow through on them, presumably, any threat you make in the future is not likely to be listened to, I would imagine. Is that your perception?
Yeah, it's he kind of painted himself into a corner, and I'm not sure why he did that. That is so because he we might not understand his methods, but somehow at the end of the day, he makes some progress in the things that he wants to do. So, but now he's stuck because what's likely to go is the Arabs or the Iranians are going to probably do nothing. It'll be interesting to see if somebody is willing to traverse the Straits of Hormuz with or without a military escort, and then see if Iran fires on that vessel.
Yeah, I mean, I'm going to pull up on the other screen the thing that I like to typically have up at the beginning of all the live streams these days, which
Like
is
that
the marine traffic.
Yeah.
And then also the marine traffic news.
One of the things I've noticed is traffic is up a little bit the last 24, 36 hours, up to about 15, 16 ships, to where it had only been 1 or 2 before.
Yeah, the issue that we were seeing there, though, was, is this the right one?
I
I
think
think
you were
so.
there. I thought what popped up was,
That was the, yeah, that was the, this was the one that I wanted to bring up because I wanted to make sure that I was getting an update on, um, was this, which is the daily risk. So this is as of today. And if we blow this screen up
oh
a little
yeah,
bit, this is the one right here that shows the traffic by day. The real thing that we're kind of interested in is the gray bars,
hmm
right? Because the gray bars indicate just sort of general traffic. And the blue is the sanctioned traffic. Presumably, anybody who has permission from Iran to traverse the strait will be comfortable doing so. It's really whether anybody else feels comfortable doing so, and we can see that actually the traffic has gone down. I'm going to guess that today wouldn't be a good day to be in the midst of it, given the fact that there was an ultimatum. I would not want to be the guinea pig for whether a threat was effective or not.
yeah,
So I could perfectly understand why anybody who is piloting a ship in the region might say, maybe not today. That's the first thing I would suggest. And we can see here what that traffic currently looks like. This ship, this was 14 minutes ago. What was this one? So this is a crude carrier, but you can kind of tell when they are sanctioned. And the reason you can tell that they are sanctioned is because they're not following the conventional shipping channels, which, as I've previously discussed, go right through the middle of the strait. And again, this is not a big area for anybody who hasn't watched this before. For those that have, we repeat ourselves. But this distance, basically, between the shores is only 30 kilometers. And the shipping lanes are only about 2 miles wide. And actually, for the vessels that have been sanctioned by Iran to traverse the strait, they're being asked to go on the north side of Iraq here. That's this little island. So they're sort of operating a little bit of a tollway, I guess, to go through this area. I think for a time, and I don't know if this is still true, they were also charging something like a $2 million fee, which is, to put things in perspective, my understanding was that the war risk premium for a ship traversing the strait under normal circumstances was something in the neighborhood of like $150,000. That has risen sharply, of course. And then Iran was saying, it's going to be 2 million. So, more than 10 times the normal number that you would pay for war risk insurance. But that's a very different thing, because an insurance premium that, gives you some measure of recovery against an attack is very different than having the principal threat in the region say, pay us $2 million and we won't shoot you. So that, arguably the 2 million is better spent than the 800,000 or whatever the war risk premium would be at this time. And I don't know what it is as of today. To Joseph Kamen's point, I believe what we're hoping for is, I would imagine, what the markets are hoping for is some measure of de-escalation.
yep.
Is that your take?
It is. One of the things that I always have concern about when I listen to Trump is people tend to overreact to what he says. Now, what he said is horrible, but he is known for saying crazy shit, and he's doing a lot of it just to get a rise out of his opponents, his political opponents. We've never had a president who likes to frequent the WWF before, and he loves to be a meme lord. And these are not, he likes to talk trash. It's like he's the Larry Bird of the political realm, because most politicians will say untrue stuff, but they don't really get personal and talk trash, and that's what Trump does all the time. So I don't know how much of this is just he's pulling something out of his usual playbook, or if all of a sudden he's really serious. I mean, it's impossible to tell. I don't know the man, and
Well, this is a little different than a domestic political adversary. It's a lot different, when we start dealing with international diplomacy in times of war, because that's where we find
yeah,
ourselves right now. And so it's quite extraordinary trying to observe this from the sidelines, not having any particular insights. But I will say that I'm rather surprised that equities are where they are.
yeah, yeah,
That is to say that it doesn't seem to be pricing in a massive amount of risk, which is another way of saying it could potentially be pricing in particularly good earnings, or they just don't think this is somehow going to escalate.
yeah.
If we take a look at how it's performed over the last couple of days, the S&P, as we can see here, is actually higher.
Mm-hmm.
It's off 20 handles right now, but I would say, given how profound an even bigger escalation arguably could be, I think that's rather extraordinary. Now, I bring this up because we had an investment committee meeting just before this,
Mm-hmm.
and my thinking was, if you're long, not a terrible idea to buy a tail hedge in long duration equity, like a 1 week, relatively tight strike triple Q put spread. What do you think?
Oh, I think that it might be. You might want to buy a tail hedge. Maybe just buy a downside put. 10% out of the money to protect yourself from, or a little bit, provide some cushion. That if World War III is actually getting underway here,
Let's
or
hope it's
or
not going
or,
anywhere far as
or
that.
Armageddon. If you, which means at least that they'd be the
Um,
last one.
Let's definitely. Okay, we have a question on the VIX, and I have a chart of
Yeah.
the VIX here. Let's see what that question is. Mike, I bought June 17th VIX 30 puts at 8:05 a week ago. If the conflict continues but doesn't escalate after today, is there any likelihood the VIX may drop to the 15 to 18 range? Thank you. First of all, what are your thoughts?
Well, the first question I have is over what time period. So yeah, I could get if this is kind of all over, and they have an agreement, let's say, it could get down to those levels, but I don't think so for a month or two, because there's still going to be dislocations as a result of spot shortages of crude oil and diesel and things like that. It really depends upon your time frame. I don't think anything's going to happen in the short time. I don't, in terms of making money on getting short the VIX at this stage.
Yeah,
I'm not looking for that.
So this is the term structure of the VIX right now. This is the term structure of the VIX 6 months ago, and what Joseph is? Do you prefer Joe or Joseph? Let us know. One thing I would just quickly point out is that you're dealing with essentially the second future, and so even in a normal condition, the
You're already down to 24.
VIX would still be. Let's just say, for the sake of argument, that we just went right back to where we were 6 months ago. Then your June future, if the markets were in the normal contango, the volatility term structure looked like this, okay, as you see. This is the option. This is the second future. So spot would be down here. This would be the first future, and that would be the second. So that would be May, which is going to roll off very soon. So as you can see, that only would get you down to, 19 or so, even if we were at vol 6 months ago. And the question is, how do we get from where we are now, which is the white curve over here, to the blue curve down here, which is where we were 6 months ago? in a really short period of time. And as Mark points out, my own take on that is that the disruption in the energy markets is not easily corrected. You're essentially exhausting whatever was in the supply chain, whatever was in the logistical supply chain, in the pipelines, in the tankers, in the the local tanks. That takes time to correct. These ships are traveling, what, 8 to 10 knots? They've been cornered in there for 5 weeks now. It's not something that's going to resolve really, really quickly. My understanding is that there's already meaningful shortages in spots in Asia. And we saw news, I believe it was yesterday, let's just double check this, that United Airlines was actually canceling flights.
Yeah, we're starting to see a number of airlines cancel
due
flights.
to, let's see here, if I can find this. Where are the... I was pretty sure I saw that yesterday. We'll try to find that that article. But I find it hard to imagine that the JUN VIX futures are going to drop below 18 in the short term. And it's just a lot would have to go really, really well. Is it possible? I suppose it is, but it doesn't seem particularly likely to me, just because even if things go well from a political and a military point of view, and what would that be? To me, the best possible outcome would be that 7:45 tonight, there's an announcement that says the Strait of Hormuz, we've reached an agreement, effective tomorrow morning, the Strait of Hormuz will officially be open. That would be as good an outcome, I think, as we could hope for. Yeah. Okay, Joe. So from now on, Joseph Kamen will be known as Joe. Great. I go by Mike, so that works well. That's my take for
It is.
For you, Joe, and for anybody else who's interested.
I think what's important for them to get an agreement is they're going to have to find a way that everybody gets to save face. If the Trump is expecting the leadership of Iran to, cower, that's just not going to happen. And so that's going to force him, and so he's got to find a way that they can save face. On the other hand, he of course is going to want to save face and say that he won. Both sides are going to want to say they won. I'm not sure that's possible. Now the question is if they don't open up the Straits of Hormuz, what do we do? What does our government do? Tucker Carlson has come out and is calling everybody in the. He's been online saying that if Trump wants to do something huge, that he's hoping the military does not, and he's calling people in the White House saying, don't follow his orders. So this is all just ugliness. That's for sure.
This is what Tucker Carlson,
yeah,
the social media former Fox person, is calling folks in the White House and advising them on policy and how they should respond to.
Well, he's just saying if he
orders
says
from the
use nukes
administrative
over there, refuse to follow those orders.
Nukes.
And if
God.
because what does it mean when you say you're going to end a society? I mean, you're going to.
Well, yeah, I would like to think that that's off the table.
I would too, and I think it is, but it's like that's what I was saying. This is he wants to be a meme lord, and he likes to bully people,
Yeah, well, like I said, I think this is a very different circumstance than trying to run roughshod over political opponents domestically, in times of war with essentially an enemy of the country for the last 50 years.
Yeah.
I'm again hoping that this is being treated very differently. I'm also hoping that policy, one way or the other, isn't being dictated by people who make YouTube videos. Even if those two were us, even if somebody, even if somebody from the West Wing called us and said, "Hey, what do you guys think?"
Now, did you see
That's not
did you
where
see
the guidance
Iran's
should be coming
counteroffer?
from. But I did not. What is
So
it?
there's a 10 points: permanent end to the war, reject any temporary ceasefire, guarantee that
Okay.
Iran will not be attacked again, end Israeli strikes against Hezbollah in Lebanon, halt all
Mm-hmm.
regional attacks, not just against Iran, full
Mm-hmm.
lifting of all U.S. and international sanctions. Number six, in return, Iran will lift the blockade and reopen the straits. Number seven,
Mm-hmm.
protocol for safe passage through um, the Straits of Hormuz. So I guess they offer one. And Iran will improve its, will still impose a transit fee of $2 million per ship. The fee will be split between Iran and Oman, and reconstruction of infrastructure destroyed by U.S. and Israel demanded as a separate condition.
Now, as a part of that, do other countries like Qatar, whose gas facilities were struck by Iran, do they get to demand reconstruction from
Well,
Iran?
that's not on the list here, but that was their part of their
No, I'm
deal.
sure it's not on their list of offers, but a potential counter would be, uh, you handle your reconstruction, we'll handle ours.
Yeah.
There's been a lot of damage done,
Well,
so you can claim you did all the damage that I mean, because the gas facility, that's a material issue. That's one of the largest LNG facilities on the
yeah.
planet. That is probably 3 to 5 years of 17% estimated impairment in Qatar's LNG production. So that's a huge project
Yeah.
to get that facility back to 100%.
Yeah. So this is a challenge because this is really stating how far apart the two sides are. I mean, to think that Iran now gets to be run a toll road in the Straits of Hormuz and get $200,000, $2 million a ship. 100 ships goes through there. They're getting a lot of money.
200 million bucks. Yeah.
I mean, what do you need to sell oil for when you get to collect that? So,
Well, they do produce. I mean, at full capacity, they produce
well,
over 1 million barrels a
yeah.
day. So there's definitely a reason, and actually more than that, because that million barrels is, in a world where their trade is restricted.
Mm-hmm.
Well, so I think where we've come to so far is that it looks like these two are pretty far apart.
Yeah.
So it's almost impossible to imagine that the administration would accept a deal on those terms. But there are aspects of that. One thing, a unilateral end to the war, guaranteeing you're not going to go to war. I mean, what if Iran said, and we won't strike Israel? You never strike us again, we won't strike them.
Well, I don't know that it says that they won't strike anybody else. Let's see.
I'm sure it does not.
And Israeli strikes against Hezbollah. So that's not on their list.
Well, given that Hezbollah is essentially bent on the destruction of Israel, it seems like there would need to be some
Yeah.
some reciprocity with respect to the ceasefire.
So I don't know how this resolves. And I'm gonna guess that the most likely scenario is the straits don't open up. There'll be some kind of surgical strike by the U.S. They'll hit some certain bases where they're gonna say that missiles get fired from these locations, and then they'll
So you think it'll be something less than
then they
the big strikes that were towards civilian potential infrastructure.
That's what I'm gonna guess is gonna happen. So there'll be some strategic strikes against military installations, and that's gonna be his way out. And then see what's up. And then if he'd like to say, hey, we hit all of these, they can no longer hit ships going through the straits. Let's go through. I mean, but
Mm.
I don't know. I would guess Iran's got an awful lot of facilities that are designed to strike ships going through the straits.
I saw an estimate earlier this week that they estimated that about half of Iran's pre-war ballistic missile capabilities was either used or destroyed. I don't know if that's accurate. I don't know how they're able to do either.
I didn't even know that.
If you don't know precisely where everything is, I'm not sure how you do, a really robust battle damage assessment. I don't know how accurate our accounts for understanding of their capabilities were, but I thought maybe we can move on here a little bit simply because I'll admit when we talk about being outside of the lane, this is an area where I'm definitely outside of mine. And we are coming up on earnings season. Delta reporting this week, but really, if we think about it, I think most people think of the earnings season really kicking off full force with J.P. Morgan. What are your thoughts going into earnings?
Well, I think first of all, just to continue with our old thought, if the war gets a lot worse, then I don't think earnings matter because we're not going to know very much about guidance. And whatever guidance is out there is probably going to be stale and not worth paying attention to because there will be energy shortages starting 6 weeks, 8 weeks from now if the oil doesn't start moving through there. So I think
we have a lot of goods, a lot of freight travels in the United States by truck. Class 8 trucks, so diesel where I am is closing on, believe it or not, $9 a gallon.
Yeah.
It's well over 8 at the Chevron closest to me right now. So for a Class 8 truck, Class 8 trucks, for everybody who doesn't know, that's the heaviest type of truck that travels on our highways. So within the Class 8 truck realm, the biggest of those that are conventional are going to be 80,000 pounds and under, 18-wheeler semis, that kind of thing, which get I think legally they're supposed to get over 7. I think their fleet mileage average is supposed to be something over 7 miles to the gallon. But basically, if we figure that they get about 8.5, 9 miles to the gallon, and a gallon is costing $8.5, $9, that means it's $1 a mile in fuel costs alone for those trucks to travel fully loaded. So that's going to impact pretty much everything that travels by truck.
Yeah. Well, the U.S. is in better shape. We'll be paying higher prices, but I actually think there's going to be actual shortages where people are going to do without in Asia, for example, because Asia is far more dependent on the Middle Eastern oil. So I would like to concentrate on earnings if we could. I just don't know that we can, but with this overhanging boogeyman, not knowing what the heck is going on. I think the options market in oil is very interesting. We talked about OVX. And, does the option market give you any way to play this? And I don't know that it does because I don't see the price collapsing with a resolution. And if full-blown war goes out, then, it could go up to 180, $200 a barrel. If this gets worse in the next 3 months, let's say. I don't know how you play it because the vol, I think implied vol on the options is close to 100. So
it is 100.
So it's do you buy a strangle? Do you sell a strangle? Do you either way? I've been trading it in a very small way, as I just been selling downside puts and the USO. So I don't trade the the futures or the futures options. So and
I think it'll take some time to normalize prices. I think selling downside puts probably does make some sense. There is some skew, which there should be, meaning that the calls are trading over. For those who are not trading the futures, why don't we just pull up USO if that's what you say you've been using, and we'll just look out, call it to mid-May, and see what you're looking at. So USO, where was USO before all of this? USO was around 110 immediately following.
Yeah. I've been using
it
about the 110
was
strikes, Mike.
It was between 80 and 90 just prior to those strikes.
You don't.
Okay, so to me, there's no way that it falls back to its pre-strike level
Yeah.
by May, simply because there's been too much disruption already.
Yeah.
So in that sense, if you said, okay, well, I'd be willing to sell the 100 strike puts, which doesn't seem like a lot of money to collect, but let's just say that's going to be 2% of USO, the strike price. So 2% of the strike over 45 days as a rate of return. So that's not a terrible risk.
It's like an 18% annualized.
18%
Something
annualized
in
yield.
that
I
17
just don't see it. I don't see how can you fall back with such a massive disruption.
Yeah, I don't.
How does it return back to its pre February 28th levels between now and May expiration? Seems very difficult to imagine.
Yeah, and there's a temptation. Can you toss up the term structure there for a second?
Mm-hmm.
Because I think the term structure is inverted.
Oops. Go.
Yeah. So.
Which you would expect.
Yeah. So there's a temptation, not necessarily. What were you talking about, May or June there?
I was talking about May.
Okay. Well, that's okay. Because for those that like to, really spin the wheel, look at, think about some of the weeklies. If you wanted to sell some downside puts, that's what I have been doing. And not in any size, like with total unconviction. We're talking, just a couple of contracts.
Right.
Sort of like to be engaged in the game, but.
If we can set the war aside for a second and imagine that it was not going on and we were just looking at some companies with earnings coming up, and Jim Howard was saying, Mark, do you run a fresh stock screening on a periodic basis? I run it very regularly, as regular viewers will know. This is my most recent one. I've made some adjustments to how I think about things, which I'll get to. Are you running a screener regularly?
I run a few screens. I generally just look for stocks that trade at PEs less than the market multiple, that are growing faster than the average stock, or let's say 5 or 6%. That's what I go look for.
Maybe I can run one for you live. So you like. I'll do that. So I'm going to just take what you're saying sort of one at a time here. So if the valuation, what do you look at? All stocks, the Russell 1000, something like that?
The Russell 1000. Well, actually, the way I do this, since I published names on the Options Edge, I like to find stocks that have a decent liquidity in their options. And so I tend to focus on companies with market caps bigger than $10 billion.
Well, I think everything in the Russell 1000 is going to have that. Yeah, this is basically mega cap now. So this is the Russell's large cap index versus the S&P. So the average for the entire investable universe, this is not weighted, is 20.8. We'll call it 21 times average. But if you cap weighted it, it would almost certainly be higher. I think the market's multiple right now is about 24. Does that sound right? 23?
That's about right, yeah.
So I'm going to we'll look for PE ratios of less than 24. That takes 1,007 stocks down to 692. A couple of those are dupes, like the voting and non-voting shares of Google, for example, both appear. All right. You also were looking for growth rates that are higher than the market overall. Is that
Yeah.
right? Like a 5-year growth rate?
Yeah, that's fine. Yeah.
So the average for what's left is about 9.8, which sounds awfully high to me because the S&P's average growth rate is probably closer to 6.5. What would you like to use as a filter?
Let's just say above, well, for this exercise, let's call it above 5.
Above 5. Okay. So now we've got 5-year sales growth above 5. That takes us to 437 stocks.
Mhm.
What else would you like to apply?
Well, that's the ones that I would go through and then try to find things that hit a theme for what's going on right now. So you've got companies like EQT and Onioke, who are pipeline companies. They're good, steady earners. So if I wanted to be writing something for, let's say, a income investor, I might look at things like that and look at how a buy right might work out, because you're going to collect some dividends. Oh, striking out the super micro.
I'm not a big fan of Supermicro.
I'm not a fan of it at all.
I haven't liked this company for years. I didn't like. I mean, their auditor fired them a couple years ago. They had these sort of fishy, non-arm's length transactions going on. I was also a little bit baffled by. I fully get that there was this server farm build out, and that's great. But they don't make the GPUs. They weren't making the hardware that goes into these things. They supposedly had, and maybe one of the producers had more technology savvy than I do. One of the things they were known for was apparently good cooling in their server blades.
Yeah.
But whenever you start seeing some smoke like that, the fishy accounting. And then, of course, now one of the founders has been arrested, so that's an even bigger mess. I just think it's a don't touch with so many things like that. This is still a big universe, though, that you have here.
It is. So I would then look for
nothing else
theme.
you would look for?
Like what's going to do well. One of the things I think that's going to be doing well is looking for companies that are competing in a space where there is limits to supply. Things like software are abundant, and that's one of the reasons why I think they're dying now. That AI makes software even more abundant, and so yes, PeopleSoft and all these
So
other.
that gets rid of the Autodesk. That gets rid of Intuit. Names like that.
So I wouldn't own them. I don't think they're going out of business or anything like that, but I just think their PE ratios are coming way down. Is they're losing pricing power. So
how do you feel about gold right here with energy prices rising? So energy is probably what, 20 to 30% on average of mining cost. And I know you actually have looked at this kind of stuff more closely than a lot of people. And so the average all-in cost, I think for Newmont, because I see it right here. I was actually just talking to one of our analysts earlier today, and he was saying that the forecast at the beginning of the year for their average all-in cost for full year 2026 was just over $1,500 an ounce. Wow. I had thought in my own mind, for some reason, that it was $1,675, that was a number that had come up on a call recently. But I don't remember exactly where I had that. But that was the number. When we were talking about it, that was the number I had in my head. Do you think that this could potentially, if you were bullish for the outcome of what's going on right now, that you could then sort of get back into the gold trade? Because some of these names did pull back a bit.
Yeah, they did a nice pullback, and I think silver came down about 15% or 50% from its peak. I think they've got a decent chance of moving higher because we are going to get more inflation, higher inflation numbers. The biggest cause of inflation is wars, because wars you're destroying property. You
Mm-hmm.
are using you're using up resources and then blowing them up. And on, number three is you're doing it with borrowed money, so you're expanding the money supply and supply of money and credit. So wars are very inflationary. Even when we were on the gold standard, whether it was the War of 1812 or the Civil War, we had price levels almost doubled during those time periods. And now the price came back down after those wars were over because back in those days the government was in the habit of paying off its debts, which it's not anymore, of course. So I think they have a lot going for them. I also in the mining space, but my favorite is companies like Freeport and Southern Copper
Mm-hmm.
because the build out of these data centers and all the electronics that's going with us, you're going to have a massive industrial demand for copper. And a lot of these copper mines has gold and silver as an adjunct to the copper that they're making. So they are getting, they get a little bit of credit, maybe 15 or 20% of revenue in terms of the precious metals. So I like companies like those. Those are the ones that I would be focusing on, as I would focus on. Oh, now I'm having a mind blank. The big Australian um, company.
Well, Newmont bought. They recently acquired. Was it
BHP.
New
I'm thinking
Edge
of
or
BHP.
reacquired New Edge? Oh,
Yeah.
BHP Billiton. Yeah, I mean, so in terms of corporate actions, just as a reminder, Newmont just recently reacquired. I say reacquired because I think they spun New Edge, I believe,
Mm.
which was an Australian company. They had spun that off something like 30 years ago. They agreed to reacquire the business 2 years ago, or maybe slightly over. I think it was 2023, and that deal just should be completely closed by now. As for Southern Copper, I agree with you. We own 28 million bucks worth of it, 160,000 shares.
You guys own Rio
So
Tinto as well?
not in the discretionary fund.
It's another name that I like a lot. Very
We
well
do
run
have
operation, very diversified across metals.
yeah, we have a separate mining portfolio, and in that I'll just list them off. But we've got Nucor, Cameco, and by the way, when I mention these names, something's probably going to pop out to you right away. So Nucor, Cameco, Albemarle, Steel Dynamics, Freeport, Royal Gold, Newmont, Uranium Energy, ticker UEC. But if you're looking and you're saying Nucor, Cameco, Albemarle, and uranium, so that mining um, fund looks across industrial, precious, rare earth, and also we own Caterpillar in
Yeah.
there.
Oh.
So because obviously Caterpillar is bigger in mining than say Deere is, and we do have some BHP, a small piece that is 3% of the fund is BHP in the mining fund.
Yeah.
So we do have a fund that does just that. Let's see here. Joe said, you like Freeport, Southern Copper, BHP. Are you buying equity positions or specific options? Thank you. And Steve Garcia says, Vale seems to be good too. Any thoughts
Um,
about Vale? We don't happen to have Vale in mining for what it's worth.
no, I had recommended selling a cash covered put on that at the options edge. I want to say 6 or 9 months ago. It expired, and
Mm-hmm.
I didn't have any comments about renewing that. So a lot of
Mm-hmm.
what I do over there is I give people ideas, and since I don't know their portfolios, I can't really tell them, um, what their book should be like. I don't have the information that a financial advisor would have. So I just
Mm-hmm.
say if I like this, and given that we're in the period where it's going to turn, I want to sell cash covered puts, and then if we actually get the turn and we start to get some movement up, maybe you want to do a risk reversal
Mm-hmm.
or a call spread, something like that. And I leave that to people to do things that fit, their portfolios. Because, like I said, I don't know what they have in their portfolio. I'd hate, and I try to remind people, if you already have a bunch of mining stocks in your portfolio, don't add to that. You
Mm-hmm.
don't need to have super constant. Again, I don't want to encourage people to have super concentrations,
Mm-hmm.
um, in things like that. So, um, but I like all those names, Ben. And if my view of the world is right, then I think you're going to like those stocks for the next 10 or 15 years. I mean, those might just be names that are buy and holds for 10 or 15 years, which has not been the case for mining stocks since like what, late 1980s? I mean, the
Mm-hmm.
worst thing you
Well,
could
it's
do is buy a
interesting.
mining stock in 1980 on a buy and hold basis.
I mean, VALE is still 30%, even now is 30% off
Yeah,
of the 2021 highs.
yeah. And I think it trades at about six
And
times earnings.
let's take a look.
It's like I think it.
It is trading. Uh, we got to switch this into dollars. If you leave it in the Brazilian
Oh, reals.
real, if you left it in real, it was trading at 1.6. This is what it looked like. But of course, you're buying the ADRs in dollars.
Right.
That would have been pretty nice. Buy the company for the next 18 months worth of adjusted net income.
Okay, so it's what it looks like
It's
12
not quite
times.
that good. 8. Yeah, it's not. Well, not even actually. Yeah, it's closer to 8.
And with
8
the
times.
metals going up, they're probably these expectations of 216, 201. I think those are reasonable to conservative, to my
Mm-hmm.
way of thinking, because I think the demands for hardware as we go more to robotics, more electric cars, although the electric cars are getting a little bit of a lull right now, but I don't know that that's going to last forever because the
Well,
batteries
I
are getting a lot
wonder.
better.
Well, it's interesting you mentioned that because I drove down to Palo Alto last week,
Mhm.
and my car doesn't get particularly good gas mileage. And then I drove up to Sonoma over the weekend, and we had to fill the tank, and I was thinking, this is getting right painful
Oh
now.
yeah, well you're
I
there
have a
where they
22
hate
gallon
gasoline.
tank, and I'm paying 6.5, close to $7 a gallon.
Hmm.
It gets to be pretty ridiculous if you have to go to the pump a couple of times a week. You're suddenly my wife's Tesla is looking much more appealing,
Yeah, that looks pretty good.
and she actually even said that. She said, "Why did you get one of these?" Um, and of course our son is off driving around, and he's always asking for gas money.
Yeah,
Um,
always got to
I,
cruise the
you know,
boulevard, man.
who's the boulevard? I mean, I will say for sure that when people say that there is, the best cure for high prices is high prices, it really does have an impact. Consumers just start to say, I'm going to drive less. I want to drive something that's more fuel efficient. Um, Production starts to ramp and so on.
But a half
Um,
your price is taxes, so that's not going to work very well.
I mean, obviously in California, our situation's a little bit different. For those of you who are not in California, in case you don't know, we have pretty much the highest gas prices in the country right now. I think we may be even exceeding the prices in Hawaii at the
Hmm.
moment, which is remarkable because, of course, Hawaii, there is no oil there.
Yeah,
California
everything's
is the
important.
third largest. Yeah, California has the third largest oil reserves in the lower 48 after Texas and Oklahoma. But of course, we can't go after it because there's no new drilling, and we also have proprietary formulations for gasoline, and we've been losing refineries.
Yeah.
And then you also have the higher gas taxes. So you put all of those things together, our gas prices don't look like probably what they do for a lot of the rest of you.
Hmm.
Um, and let's hope for your sake that you don't get to where we're at. But
Doing a
like I
podcast.
said, mid sixes to
Come back
7. There
then.
are places in LA that are north of 8, and diesel's running around $8
Come on, watch.
and
15
change a
minutes.
gallon, close to
15
me.
minutes. Okay.
Uh, okay, sounds like you have a
No,
student who
yeah, he
is
just wanted to
looking
come
to
in and
meet with
talk.
you.
I got a young bloke who we're going to be doing some research with Bitcoin and on-chain data.
Ah,
So we just got.
what about Bitcoin?
So I
We haven't talked about that in a
Yeah.
while.
So we
Talk
just
to me about
bought
Bitcoin.
data so that we got a data provider. So now we're going to start looking at a lot of different models around pricing models, and he wants to build trading models, and so we're going to try to do that. We're going to use machine
Mm-hmm.
learning to see what we can learn. I'm
Mm-hmm.
interested in just doing some pricing models to see if we can find those factors that explain most of the price action, and
Mm-hmm.
so those are things we are going to be working on. I'll be working on over the summer.
So yeah. I mean, somebody came out. I saw this. There was a post. Could have been Benzinga or somebody like that. Put an X post out yesterday where there was people were in a real twit, and the reason they was because an analyst came out and said that he or she, I don't remember whether it was a he or a she, but that the price of Bitcoin could fall to as low as 10,000. And apparently people were all up in arms about this. We have had over the course of Bitcoin's life several 80% drawdowns.
Mhm.
That wouldn't take you to 10. I'm not sure where that 10,000 number came
Yeah.
from. We're still in a relatively weak spot from the long-term trends by the looks of things. I have a logarithmic chart up here.
Yeah.
I don't know if people can kind of make out what's going on. I'm going to
If
get
I can
rid.
do
I
it, I'll do a
always.
shout out to the people we're buying our data from, and that's newhedge.io. One of the things that they have up on their screen and their front page is the Fear Greed Index. And the Fear Greed Index has been sitting below 15 for
You're getting it. Who are you buying it from?
newhedge.io.
New Hedge. I've heard of New Edge.
Newhedge.io.
Okay. Yep. Okay.
Um,
Mm-hmm.
and just hit, you don't have to necessarily log in. You can just explore it and then the API. Try that one. Just try hitting that button. See if that takes you to the front
Mm-hmm.
page. It doesn't. Well, I could share mine,
Okay. Yeah.
um,
Let's have a.
my screen.
That would be
So
great.
let's see here. Where's my, where are you, Zoom? I can't find my, here it is. My Zoom thingy. View. Why am I not share screen? Okay, there it is. This one over here. So down here, um, this I've been watching this for quite a while. I don't. Here's a 1 month. It
Mm-hmm.
extreme. So that's where it is live right now. Um, but they've got all this different data that which I think is very handy, and we're going to be extracting some of that data and see what machine learning can kind of help us with. Um,
Mm-hmm.
and but yeah, you've been seeing this thing fall. One of the things I think is interesting, the technical guys. Now, next time you talk to Carter, you might ask about this because people call these little things bull flags, where you get it comes down and then you have this little bounce and then it falls out. And then you've got this little
Mm-hmm.
bounce again. Some technical types are thinking that another one of these big downdrafts is
We're gonna have Carter on the channel tomorrow afternoon at 4:15 Eastern.
yeah. So you might ask him about that, what he thinks about that, um, because it looks like another bear flag, and then the bottom fight falls out again. Listen, as I always say, price can do whatever it wants, and it seems like if there was an asset that would do well in an environment like this, it would be Bitcoin, because let's say you're over there in the Middle East and you don't and you want to get money out. Well, one of the ways to do that is to buy a bunch of Bitcoin, keep it in a hardware wallet, and then you get it on an airplane,
Mm-hmm.
and you go to wherever you go, and then you've got access to money if for some reason you can't get money out of your country. I could see maybe you can't if you're an Iranian and you're trying to get out. If you can, how do you get your money out of the country if you want to flee and go someplace? That's a big question. So I would have thought there would be some interesting demand dynamics going on here. There's also a very interesting website here. STRC. Did we talk about this before?
Oh, yes, that's a great one. Yeah,
STRC.live. This is what when MicroStrategy will sell their preferred stock, their variable rate preferred stock, whenever it hits 100.
mm-hmm.
So when it does, they sell that preferred stock and then they immediately buy Bitcoin. So far today, they've bought 470 Bitcoins. And if you kind of go down here, you can kind of see what they've been buying. Kind of, I don't know. I guess it's really week by week, but they're buying an awful lot.
Mm-hmm.
View all. Let's do a quick view all. They're buying a lot over time. They got the average price, the amount of Bitcoins bought. I mean, these are substantial numbers.
Mm-hmm.
And so I kind of been wondering why that doesn't seem to be having any effect on price. Something is
Well, it
going on that
probably
I
is
clearly
having
don't understand.
well, it has an effect. I have a feeling that the net effect is that this kind of behavior is probably just reducing vol, if not creating a firm bid,
Mm-hmm.
but just stabilizing the price a little bit. And you had previously mentioned you own STRC as well as MSTR and some Bitcoin
Yeah.
itself, right? And you're also mining
Well,
for it.
we mine it here at the school. And then personally, most of the Bitcoin that I have is in IBIT, the ETF, held at a brokerage firm.
Mm-hmm.
So, I don't, I think it's nice to have the option to self custody. But
Mm-hmm.
the self custody comes with a lot of responsibility. You don't lose your keys. You don't lose you lose track of your username, password, seed phrase, all that kind of stuff.
Or have some kind of just a hardware problem.
Yeah.
You and I are friends with somebody who had such an issue and lost access to what turned out to be 8 figures worth of Bitcoin. Although, quite fortunately, after many years, he was able to recover that. Well, we're kind of coming up on the top of the hour here, so I figured I would just ask you. Oh, whoops! Steve Garcia has a question. Oh, he has a question for you.
Oh,
Let me see.
okay.
Question for Mark: do you recommend all Bitcoin long-term investors to do self-custody? Well, I guess you kind of answered that.
Yeah.
Or would it be okay to hold it on the major cryptocurrencies like exchanges? I assume you mean like Coinbase and Kraken.
I prefer. I mean, I prefer at this stage of the game that use a traditional broker like Schwab, TD Ameritrade, Interactive Brokers, folks like that, maybe even Robinhood, because of security. They've been in this game a long time, and so they spend a lot of time, money, and effort into making sure that all their assets, not just their cryptocurrencies, are secure. So
That makes the custody problem theirs, not yours.
yeah, so that's right. The custody problem is theirs, not yours, and then use IBIT. Or if you want to, you can do a now you gotta I think IBIT charges 25 basis points a year
Mm-hmm.
for their fund. I think there's some that charge less. So if you want to pick one of the other names that has a lower annual fee, to me they're all generic. I don't see one as being better or worse than the other.
Mm-hmm.
I The biggest one is going to be Liquid. I'm sure there's a website you can go to and get a list of them and see who's, get an idea of what liquidity is like, the size of the funds. So that's where I suggest that most people go until you're up to speed and want to deal with the issues associated with custody. That's also been one of my issues that I talk about with my students. That one of the things that I think is holding the world back is custody
X
has to
users,
get
by
as
the way, or
easy.
people who are watching us, I think you're going to lose us in a second because I believe that stream gets cut off at the top of the hour automatically,
Okay.
but the YouTube is going to continue a little bit longer.
Yeah, okay. I was just going to finish and just say that I forgot what I was going to say now.
I'm sorry to cutting you off, but I wanted people to know they're now cut off. I think their stream just ended.
Okay. Bummer.
So those people can come over, but I apologize for destroying your train of
Oh,
thought.
but my
maybe we
train of
can get
thought
back
was
to it.
is that once custody of Bitcoin becomes as clean and easy as having an account at Schwab or TD or any of these kind of firms, that would be to me the most bullish thing in the world. You know, there's still
Mm-hmm.
people that are afraid, and why not, right? And a lot of these exchanges that are out there, I don't want to name them because I'm sure their security is getting better and better all the time. But you know, you do hear of breaches from time to time on crypto exchanges.
You're afraid of another Mount
Yeah,
Gox?
that or there have been others that again I don't want to mention because I want to get it
Mm-hmm.
sued. But yeah, it happens from time to time. Now I'm pretty confident that everybody's stepped up their game. You know, the major players, and that's not going to be an issue anymore. But I just want to stay on the safe side. And once they make it, you know, easy enough for a caveman to do it, then um, I think that's what really what it takes to get to mass adoption, and then, you know, what the bulls hope is much, much, much higher prices.
You know, it's interesting that you talk about you know, the faith or credit worthiness or the safety of legacy brokerage platforms like Schwab and maybe Robinhood could fall into that. Is there
They're
an
kind of
S&P
new
500
now.
company now? They're kind of sort of in the realm. You know, when you buy and sell stocks on most of these self-directed platforms, you are the securities aren't even held in your name; they're held in street
Right.
name, and they're a ledger entry at the respective brokerage platform, which illustrates the amount of confidence that the customers have in the big brokerage platforms. And I think it's a well-trodden path at this point. I think I have a lot of faith in the structure of our markets in the United States, and so in many instances, I probably would be more comfortable with my assets being, you know, held at, you know, one of the major brokerage platforms than I would in my own ability to ensure that something didn't happen, that I didn't have it on a local machine, that one of my kids didn't get into it and do this or that, and the next thing you know, it's compromised.
Yeah.
Or that
Spend it
something,
for it
you know,
for you.
or frankly that you know, my machine doesn't just crap out in some way.
Yeah.
That happens all the time. I mean, I have three right here under this desk. I have three PCs, and two are not currently in use because I got more than one. You know, once I've had two blue screen of deaths in rapid succession, I'm assuming that machine's not long for this world, and I usually get another machine around that time.
Yeah.
This machine that I'm on right now is probably due for replacement. I can't remember. I've had it for just a couple of years now. But just that concern is enough. I think there's more safety and more redundancy, believe it or not, probably in some of those platforms. And maybe we'll leave it there for now. Let's see here.
Okay.
I'm going to just say Tucker D. Dog said, people warn 2029 is the quantum reckoning for Bitcoin security. I have heard that. How is it not for all computer network and internet security? I have heard that too. So when I was at the Crossroads Summit in Miami a little over a year ago, that was the big issue. 2029 was considered to be sort of the earliest sort of general estimate by people who invest in quantum and when they thought it was going to be more commercially available. But they have suggested that quantum is a complete game changer for security.
It is for everybody. If you're a state actor and you want to mess stuff up, you know, go attack the Social Security system. Go attack J.P. Morgan Chase. Go, you know, just think what would happen if somehow somebody got in and they erased everything over it at Social Security. People point the finger at Bitcoin is vulnerable to this, and I agree that it is. But your bank account is
Google said they said it's not the earliest. So apparently, Alphabet is saying that is a hard deadline, and they will hit it.
yeah, and that's okay. That what I'm saying is that okay, you attack the Bitcoin network and you trash it. You don't make any money. $1.5 trillion.
By Alphabet.
Falls apart, right? And you lose a bunch of money. What is that? 1,000 S&P point or 500 S&P points? I don't. Um, so that is not that. If you're a state actor trying to attack the global economy, that would not be the way that you would do it. Like I said, you would go after somebody big, somebody like J.P. Morgan, or Bank of America. Go after a big bank. Go after government databases and things like that. There are all kinds of other things that are infinitely bigger that I would think if you wanted to create mayhem that you would go after first. Now you might go after Bitcoin because it'd be a challenge. So okay, and if that's the case, we're gonna all go back to paper and pencil. You know.
Or gold coins.
Gold
Start
coins.
carrying a little purse with gold coins around.
Yeah, and so maybe advancing into AI sends us back to the Stone Age.
That would be ironic.
It would be ironic. But these are things that I don't doesn't keep me up at night. There are other people that are going to do that. I'm sure people will find stronger encryption between then and now. Those are the kind of changes people are willing to make to the Bitcoin network. Improvement in encryption. The kind of things they won't change is things like block speed and block size and number of Bitcoin and things like that. There's no real incentive to do that, but everybody's got an incentive to make sure that the network is as solid and structurally sound as possible. So people will get smarter at that. I'm not an expert in encryption, but I'm sure lots of people are. But you just think about, well, you've got SHA-256, which is unbreakable with current computer technology, and it's competing with 4 and 6 digit PIN numbers. One is very easy to go bust, and the other is not, right? So I don't see that being a problem for Bitcoin at this stage of the game. It may be someday, but at this point, I don't. I think everything else is much more at risk.
Yeah, well, PIN numbers. I'll leave people. If you don't know who Oz Perlman is, he's a mentalist. He's been featured on CNBC several times, and many other places. I encourage everybody to go look him up, Oz Perlman. One of the things that he's very good at is divining people's PIN codes. He can. I think he was on Joe Rogan's podcast.
Yeah, he did it to Joe.
And he did it to Joe Rogan. Joe Rogan said, "I don't like that." Well, no surprise. Yeah. And apparently, the more intelligent you are, the more likely, at least from his perspective, that he's going to be able to guess things like that. In any case, we've chewed up more than an hour of people's time, and we always appreciate your time and attention, and we hope you come back and join us again next week for another one of these. As I previously mentioned, I am going to have Carter Worth on the channel tomorrow at 4:15 Eastern for anybody who wants to tune in for that and maybe ask some questions. We're going to talk about some various concepts, option selling versus buying. We're going to talk about the concepts of total return, something that Mark and I have discussed in the past with everybody, but probably deserve some more conversation. And maybe he'll give us some of his better ideas right now. I hope so. So until next week, Mark, have a good rest of the week, and I look forward to talking to you next week if I don't chat with you offline sooner than that. Okay. And thanks for your insights as always, and thank everybody for watching. like, notification bell, and send us your questions, and hopefully we'll get to answer them in a future episode. Thank you for watching.
Thanks.